Hello and welcome to Funding Your Dreams with a Home Equity Loan, brought to you by First Tech Federal Credit Union. My name is Richard Lucas. I'm a Home Equity Loan Officer, NMLS number 414155. A little history about me. I've been with First Tech here for coming up on 7 years in our home equity lending team, and been in lending and finance for over 15 years now. So what we'll be learning today: understand what a home equity is, know what a home equity can be used for, gain insight into the benefits of home equity, and how to choose the right loan for you. So first, what is home equity? So home equity is the market value of your home minus any outstanding loans or liens. So this example here, if your home is worth $500,000, and you subtract the loan balance that you currently owe of $350,000, that's going to give you $150,000 of equity. Now, keep in mind that in this case we're talking that the $150,000 will be 100% of your equity, and we'll get into what the lendable equity is here in the next slide. Common uses about home equity: can I borrow against the entire equity in my home? Back to the 100% equity question. Most lenders, including First Tech, aren't going to lend 100% on a home equity loan or line of credit. So, for example, with us, if for a well-qualified buyer, if we're looking at your primary residence, we can lend up to 90% loan to value in most cases. So what we do to calculate that for yourself, you would first go with what you would assume your current home balance or home value is. So if you were to sell today, what you think you could sell the home for, take 90% of that value and then subtract any existing mortgage. And that what's left is then what we would estimate your lendable equity to be. What am I allowed to use the equity in my home for? So this is pretty open. Once you have a home equity loan or home equity line of credit in place, you don't need to come to us for permission for each withdrawal or to make sure that it's okay for what you're using the funds for. Some things we might ask when you're initially applying, is this going to be for debt consolidation or is this going to be for home improvement? If you are going to be using the funds for the purchase of towards the purchase of a new property, if you're in contract on that, we'll need to get some information about it just so we can make sure we're calculating in that new residence payment into your debt to income. But otherwise, again, once you have this in place, the funds are available to you at any time. Is it a good time to take out an equity loan? Rates are historically low, and the need for people to tap into their home equity is higher than ever. So now is definitely a great time to take out an equity loan. This leads us into the next question here. Are interest rates favorable? Yes. So interest rates are historically low right now. So we have historically low rates, extremely high demand. Now is a great time to get it. And my biggest piece of advice is if you're thinking about whether or not you need or whether you want to get a home equity loan or line of credit, get the process started as soon as you can, because these things are taking longer to get set up just because of the high demand. And how is my rate determined? So a lot of factors are going to go into how we determine rates. So the property type, whether it's a single family home or a condo, the property status, is this your primary residence or an investment property? Credit scores, the loan to value ratio. So get back to that, are we doing 90% of your lendable equity or are we doing 70%? And then of course the loan amount. So, things like, is this $100,000 or $250,000? At any time, you're welcome to reach out to our home equity sales team, and we'd be happy to go over these with you and get you an accurate estimate as far as what we'd be able to lend and what those rates would look like. What can home equity be used for? So some common uses for home equity are home repairs, such as a new roof or fence, home improvements like a bathroom or a kitchen remodel. With a lot of us spending a lot more time at home these days, it's a great time to make upgrades to make your homes to make your home more pleasant to be in. Education, it's a big one that's not often thought of initially, but having a home equity line of credit in place for when your older kids are going off to college is a great idea. You're able to withdraw funds simply as needed versus having to get lump sum distribution that you're paying interest on before you actually need it. Debt consolidation, so consolidating higher interest rate credit cards into a home equity loan or line of credit. Down payment on a new home. So again, this is a big one right now because home prices are going up. Things are becoming more competitive. Being able to have a large reserve of cash in a home equity line of credit is a great tool. And then large purchase, such as a new car or a boat. What are the benefits of using home equity? Flexible and interest-only payment options. So with the home equity line of credit, during that initial 10-year draw period, the minimum monthly payment is just the interest that's accrued. You, of course, can pay more to pay down the principal, but having that flexibility of being able to pay just the minimum when you need to is a nice feature. Often there's no prepayment penalty. So on our home equity loan products, with the loan, there's no prepayment penalty. With the line of credit, you can pay it off at any time. You would only have to repay those closing costs on the home equity line of credit if you were to close it within the first 2 years. So that would mean something like selling the home or refinancing the line of credit somewhere else. Paying it off doesn't close it. It would just be down to a zero balance. Low or no closing costs or application fees. So first, that covers the standard closing costs for loan amounts up to $250,000. Those closing costs vary, but generally they're between $350 and $950. Interest only, interest may be deducted by, maybe tax deductible. Now, check with a qualified tax advisor on this one. There have been a lot of changes to tax law, so things that may have once been deductible or no longer are in this scenario. So they may be, but definitely check with a qualified tax advisor. What is home equity? Is a fixed rate home equity loan or a home equity line of credit right for you? Some things to consider. One option provides regular fixed monthly payments, while the other will depend on the balance that you owe. So with a home equity loan, you're talking about your traditional second mortgage. So it's a term loan. You're going to get a set amount at closing put into your account, and you'll start paying it back monthly over a specified time, just like any other traditional loan. With a line of credit, you have a credit limit that you're able to draw from, similar to like a credit card. So you could, let's say you have a $100,000 home equity line of credit. You're only going to be paying interest on the funds you've actually pulled from that credit line, and you can pay them back and reuse them as often as you'd like. So determining which one's going to be is going to be right for you. Do you need a single lump sum amount, or do you prefer to borrow only what you need as you need it? So steps of the loan process, we'll start, of course, with the application. So to submit your home equity loan or line of credit application, you'll do that through the First Tech website. Once you've submitted that, it'll go over to a loan officer. You'll have a dedicated loan officer from start to finish there, and they'll let you know what documentation we're going to need from you. So these will be things like pay stubs, mortgage statements, homeowners insurance. Each scenario will be different, but those are usually the most common ones that we're going to need. We'll also pull a home value report. So again, for loan amounts up to $250,000, we will cover the standard closing costs, and that includes the desktop appraisal. So we'll just pull an automated value based on recent sales in your area. Once we have all the documentation and the home value report back in, we will submit your application to an underwriter who will review everything and then give your initial approval. Sometimes there'll be some additional items they'll request before getting the final approval. And once we have that, you'll get your final terms for you to review prior to signing and then funding of your loan. How to determine a home's value. So we're going to compare similar recently closed sales in your area, generally about 3 to 6 months back. They'll look at pending home sales that are in escrow, analyze any active listings, homes that are currently for sale, and they're going to compare them against homes that are a similar size, year built, bedroom count to your home. Now, keep in mind, these automated home values are a bit subjective. So if you, and especially if you've done extensive remodeling to your home, there's not a way for that to be taken into account here. So this is the initial free appraisal. If you feel that the value is inaccurate, you of course have options to request something that's upgraded that you would most likely have to pay out of pocket for. but for most scenarios, this is going to get us what we need. Some examples of monthly payments. So starting at the top line here with the HELOC, which is the home equity line of credit, for a loan amount of $50,000, assuming that you've pulled the full $50,000 out, because keep in mind, with the line of credit, you're only paying interest on the amount that you've utilized. So if we were at a rate of 4.75 as an example, the monthly payment on that would be $197.92. Now we go down to the 5-year fixed home equity loan. So again, this is a term loan, so you're receiving the full $50,000 at closing with an assumed rate of 4.49%. So you can see how the monthly payment jumps up significantly, because instead of looking at an interest-only payment, we're paying this off within a 5-year term. Some common terms. Equity, again, is the market value of your home minus any outstanding loans or liens. A HELOC is a home equity line of credit. So that's a line of credit extended to you that uses the equity in your home as collateral. Fixed rate equity loan, an installment loan extended to a borrower using the equity in the borrower's home as collateral, also sometimes known as just a standard second mortgage. Closing costs are the expenses incurred in the process of originating a loan, but not limited to origination fees, appraisal fees. Appraisal is the assessment of the current market value of a property. Disclosures are, lenders are required to provide these to borrowers with information regarding their loan. These are called disclosures. Included in them is going to be information about the loan program, interest rate, and estimated closing costs. Prime plus margin. So you'll see this when we're talking about rate. That's the current prime rate, usually determined by the federal funds rate, which as of today's date is 3.25%, plus the amount added by the lender. So the margin is going to be what we add on top of the prime rate. First Tech home equity loans. So to summarize, we'll start you off with an easy online application process. Once submitted, you'll have a dedicated loan officer that will walk you through from start to finish. Quick turn times, right now they're actually taking a little longer than usual, again, just because of the high application volume. But you'll be getting quick responses from your loan officer. And easy access to your equity loan. So once this is in place, you can access this online at any time. For the home equity line of credit, transfers into your checking your savings account from your HELOC are done instantly with easy access. All right, and then lastly now, we'll open this up to questions from our listeners.
All right, the first question for you is, if I want to do a home project or multiple projects, but I don't know how much it's going to cost, how do I know how much to ask for when applying?
That's a great question. So when we're talking about what we're looking at, should I do a home equity loan or should I do a home equity line of credit? That's usually the biggest factor that plays into it when I'm trying to figure out what's best for a borrower. So if you're still trying to figure out how much you're going to need, I would almost always recommend the home equity line of credit, because you can request a larger amount. You can add on 20, 30% to what you're going to need as an available credit limit. So meaning you're not going to get the whole amount distributed to you in your checking account like you would with a loan. You're just going to have that credit line available to you. So you're only paying interest on what you've taken out as you take it out.
All right, thank you. Can I use equity to buy a vacation home?
Yes, absolutely. So what we can do in that scenario, we're taking equity out of your current home and giving that to you, which you can use towards the down payment, or depending on how much equity you have, in some cases, the full cash amount needed to purchase that next home.
All right, I just purchased a home last year. What are the chances that I would have home equity built up in my home currently?
Under normal circumstances, it might be a little tougher, but in these last couple of years, we've seen some significant increases in home values across the country. So the likelihood is very high that we would actually have enough equity in those cases. Some of that can depend on how much of a down payment you put when you bought the home. If you already used a combination of home equity versus traditional mortgage, but I would say in most cases we would have enough equity to lend to you there. And you're always welcome to reach out to us, and we can do a quick calculation for you.
All right. So one more question for you. You mentioned timelines are longer right now. Do you have an estimate of
Mhm.
how long you're taking?
Yes. So currently, our average turn time for home equity loan or home equity line of credit is about 75 days from start to finish. That would be from the day that you submit your application and provide us the documentation to when we're sitting down and signing those loan documents.
Perfect. That was your last question.
Perfect. Well, thank you very much, Melissa. And again, for any other questions or for specific rate quotes, please reach out to us here at Equity Sales.